Hey, we're back with the Holy Macro Show today, and we got a bunch of stuff for you guys today. And sorry, my dogs are kind of going crazy in the background today. I think that's going to be a theme. Cats are terrorizing them. That happens. So I wanted to go through Kashop. You have a new front page, a new home page. So what are we looking at here?
Hey everyone, so I just wanted to spend a couple of minutes talking about the newsletter and what I'm offering. So this is the login. So I'm just going to take you through the entire members area so you can judge for yourself what exactly I'm offering because I know I haven't talked about it all that much earlier. So this is the newsletter page, and as you can see, the way it's organized, it's like start from me, you get every single article, everything I've written, it's all here. So I'm just going to do a quick scroll through. And as you can see, I'm active on a monthly basis. And I know I don't write as much as Jason. He does daily, which is pretty amazing. So I try to make it as much as I can actually because there's a lot of content and I need to do a lot of research as well to cover this. So this is the cool part. So here you can see all the trades I have on in my stock portfolio. This is my complete portfolio. And I also share what's my entry price. So, if you're new and you're joining in, you can kind of see that let's say New Fortress Energy, I'm up something like say 60%. So would you want to take this trade or no? And you can see how I've sized it. And as you can see, looking through the position sizes, it's a very diversified portfolio. I don't do this concentrated thing where I know for sure X is going to work, and therefore I'm going to put 100% of my money on X, or I'm going to go into credit card debt and buy more X, which is what you see all these fintech people on uh, doing, especially with Bitcoin. They're like, let's just get into debt. Let's just buy these 2x leveraged ETFs. And so I've spoken about New Fortress Energy a lot, and this is a little like you can see what's the size of the position. So it's 5.5% of NAV. This is as of I think Monday, but as you can tell, it's pretty diversified. So I got stocks across tankers, I got stocks across oil services, dry bulk, oil exploration and producers, gold miners, you name it. I have the entire thing, copper miners, everything. So it's pretty diversified. And again, like this is a lot of work to produce this. And some of these reports are just stuff that you will not get anywhere else. So for instance, I'm just going to click this. I'm just going to show this one of the premium reports that I did. And so this is a stock called Amex Exploration. So I wrote this on Jan 1st, and this is a company I've been following for years and years and years. So I'm just going to do a quick scroll through. Of course, I don't want to give away too much of my secret recipe for free, but you know, just so you can understand the depth of work and what it takes to produce these kind of reports. So all of this is yours for $150 a month or $1,500 a year. So that's my plug for the newsletter, and let's get started with the Holy Macro Show.
No, I like it because I think it's generally it's like people ask what we do a lot, and I think it's a good thing to show that. Also, the website looks really good. That's another thing I want to say, man. That's really good design work there. Who
Thank you.
who ended
That's
up
that's
doing
all.
that for you?
That's all done by my wife,
Yeah, I was
COO
figuring.
partner.
Yeah,
Yeah,
she's so good at that. That looks so good.
she is. She
Uh,
is. Yeah.
that's that's awesome. And so, the one thing I wanted to say too is with what I do, and the reason why I'm obsessive, I'm crazy. So generally, I like to put things out day after day because I'm looking at stuff and I'm always trying to just put out what I'm looking at. But number two is when when you're doing deep dive stock research like you're doing, that's going to take more time, and it's not something you can put out 5 days a week. So I really do like what you have there, and it is great work. That's the thing; like you can't find things where people are really deep diving into stocks, finding actual valuable plays, and then showing you their entries and exits. That's the other thing that I absolutely hate about trading, which is when people don't show their entries and exits. You should show either your percentage of your returns, when you entered the trade, something, so people understand these things. If you're just putting out, I'm long blank. I mean, half the time people don't even do that. But if you're just putting out, things and saying, here's my trade idea today without any actual tracking sheet, what does it matter? You're not really trading. You're just telling people what you're thinking of doing, and you're probably not actually doing it. You should have some form of a track record. So let's jump into it. You guys, my Ethernet cable got chewed. I have another one I can pull out. So if I get grainy or choppy, just let me know. Looks like the Wi-Fi is actually doing good right now. So just let me know, guys, if you guys see anything like that. But yeah, anyways. So what did you want to talk about today? Because you mentioned it at the beginning. So you mentioned a couple things. Where do you want to start?
Sure. So let's start. Everyone's talking about the strategic crypto reserve. The Bitcoin reserve is now the crypto reserve. So everyone's talking about how this is bullish for Solana and Ripple and every crypto project that's created in the United States. And everyone's also talking about the 25% tariffs on Canada and the impact that will have on the oil industry. So let's and I think we should just zoom out and not look at exactly these two topics. Let's look at something that's little more historical. Let's look at the similarities between the 1920s and now, specifically the era leading up to Herbert Hoover's election and leading up to Trump's election. Because I think you have read lots of finance, I've read lots of finance, and I think you have done amazing work on history. And I remember you used to give quite a lot of presentations at universities in Ohio on the history there. And
Mhm.
so let's jump in. So when I tell you this is the topic that I'm thinking of, which is the dollar strength and how that worked out during the Hoover election and the Trump election, what comes to your mind?
Hmm. The dollar strength, the Hoover election, the Trump election. I'm thinking of the crash that never was and the recession that never happened, 1920-ish, under
Yeah,
not
21,
Hoover,
22.
Harding. It's
Yeah,
Harding into Coolidge, and then so on. So yeah, so that's what I'm thinking of.
yeah. And it's pretty interesting, right? So that was the forgotten depression where the government did nothing, and lo and behold, everything worked out. Now, now we will never get a Fed that says we will not do anything. Like they said they would continue hiking throughout the Silicon Valley Bank crisis, and then what did they do? Sunday, I remember looking at the news cycle back then. So Sunday morning, Yellen comes out and says we are not going to do anything about this. We are just going to sit on our hands and let the FDIC and the banks work it out. And then Sunday evening, like, hey guys, bank term funding program. And that was it. And that was the moment where it was obvious that we were going to get a crazy bull market in the tech stocks and crypto. And it was obvious only in hindsight, of course, because at that time everyone was panicking about first it was Silvergate, then it was Signature, then it was Silicon Valley, and then it was First Republic, and everyone was panicking about where would this end. And it turns out that was the perfect bottom. So even if we had missed the October 2022 bottom, because that was a scary bottom, the October 2022 one, with CPI at 9.1% or something. But this was the perfect bottom with the bank term funding program. So anyway, so when I look at what's happening now and what happened in the 20s, so my framework is, as you pointed out, that was a forgotten depression. There's a book on that. And after that, we got the roaring 20s. Now, the roaring 20s was due to the invention of the automobile, and I think, was it radio at the time? I think, yeah. So it was
There's
radio.
a bunch of very interesting things there.
Yeah. So all those technologies came together. Everyone got excited, and crucially, because Europe had its World War One, what happened was all the European elitists, the central banks, everyone, in fact, they moved their gold for safety to New York. So there was a huge influx of gold coming into New York. And because this influx was putting up a rally in US asset prices and what the European, so this was the conversation that's recorded in Laws of Finance between the two central bank governors of England and the US. And they said, unless you print more money, we will not be able to stop the outflow of gold from Europe. So even though technically the dollar was pegged, they decided to print more dollars. And the dollars that they printed ended up creating a big asset bubble. So you had overall you had the technological innovation, all the automobiles, radio, everything. And at the same time, you had this money printing effect and that amplified it and made it into a bubble. So, come 1929, the bubble was of colossal proportions, and this was also the time where so Herbert Hoover he actually made all his money on mining. He was a multimillionaire. There were no billionaires back then, except maybe J.P. Morgan. I'm not sure. So at that time he was considered an outsider. He was considered someone, the drain the swamp kind of person, and he was outright hostile to Wall Street. So in fact one of his campaign promises was to reduce margin debt because he thought the margin debt was fueling a bubble in equities and he didn't want Wall Street to benefit at the expense of the other parts of the economy, the main street. So he said we have to cut down margin debt. And it turns out he did, and that brought the whole thing collapsing down. Now, of course, what made the Great Depression? The Great Depression was not margin debt collapsing because they have always had banking crisis and nothing came of them. The banks would just clean up the messes, and because there was no lender of last resort, there was no QE, there was no bank term funding program. In fact, there wasn't even an FDIC. The FDIC came into being after the Great Depression. So in that era, these crises would just correct themselves, and people who had money, and this was the time when people had their money in bonds. So they had their money and they used to clip coupons. Not everyone was speculating in equity. So equities bubble bursting was really not that big a deal. It would be completely different today where 60-70% of household wealth outside your primary residence is in equities, right? So now it's different. But back then the number would have been 6-7% maybe, and that too only for the rich. So this was the time where the market forces could have corrected themselves, but instead of letting that happen, the senators pushed through the Tariff Act, the Smoot-Hawley Tariff Act, and that led to retaliatory tariffs, and they just prolonged everything until outbreak of World War II, which made all of this unnecessary. And in fact, it was so crazy. Do you remember there was this period where wheat prices were so low and the farm lobby was so strong? They asked the government to buy up wheat, go into the middle of the ocean, and just dump it just to take the price up, get the supply of the market. So we saw some truly insane economic policies back in the era which prolonged the Great Depression. Now, how does this tie today? It ties in with Trump. Whether or not he's an outsider, that's a matter of opinion at this point, I think. But he certainly has all the appearances of being an outsider, and he's certainly inheriting a stock market bubble. I think with 34% of the S&P 500 just concentrated in seven stocks, which makes the whole concept of 500 stocks kind of meaningless. I think it's consensus to say that it's now a bubble. So, and you have a strong dollar, which is similar to the gold inflows coming in during the 1920s to the US. So instead of gold, now it's the capital of all the rest of the world that's getting sucked into the US. So you have those similarities. And the final similarity is the tariffs. So we just have Trump talking about a 25% tariff on Canada and I think a 25% tariff on Mexico. So we have all these points aligned, which make me think there are similarities. It's not going to be the same, of course, but there are so many parallels to the 1920s that I can't help but think, will we get some kind of cataclysmic event? So I wrote an article where I call such an event the Minsky moment. So named after Hyman Minsky. So you can read the article. It's on my website. It's on Twitter. So it's just food for thought. Like the thing with all these macro opinions or looking at history is it's not exactly like you can act on them. It's just that it gives you a framework. When something happens, and you don't have a framework for it. So humans hate randomness. If you find something, you have to have a logical explanation for it. Otherwise, the why just gnaws at you, and it does that more for me. So whatever I see happening, now that I have a framework, I'm able to deal with it a whole lot better. So I thought we'll just talk about it and get your perspective and Kevin's perspective on it as well. I'm not sure if Kevin got the whole thing, but
No, I
we're
love
just talking about.
I love this because one, Kevin and I have talked about tariffs a couple times and what can happen. I love the parallel because I thought about this and I wanted to make a video on it and I just never got to it. The Smoot-Hawley tariffs were something that was pretty devastating that a lot of people overlook when they go back to that time. People like us who studied economic history, who study Mises, and go back, like these are the reasons why a lot of this happened. Now, once again, people keep going, hey, he's just using it as a negotiating tactic. Kevin and we did a video on this, I want to say a month ago, and they said, you guys are dumb. He's just doing this as negotiation. You guys don't know anything. And really, it's like he did it last time. Why wouldn't he do it this time? And tariffs do happen. They're incredibly hard to get rid of after you put tariffs on things as well. So, there's tariffs on I think it's eggs or something in Europe that has been around forever, and people just stopped buying eggs from Europe for some reason back then, and that's the reason. But no, everybody likes to overlook it. But we've never gotten rid of those tariffs. Still, it's very hard to get rid of them going forward. We keep trying to threaten them. It could be devastating to the economy. A lot of people keep going. I mean, if I said, "Hey, everybody, we're going to put 25% taxes on people," people would freak out. They'd go, "Oh my gosh, Trump's an asshole. He's putting on 25% tariffs." Or if I said Biden's doing it, they'd be like, "Oh my God, Biden's an asshole. He wants 20%, 25% higher taxes." But when you say tariffs, people just don't see the difference. If you go to the store, you're going to have 25% higher prices on things because they're going to pass that on to you, onto us. So
Yeah.
it's not like the money just disappears into the nether and Walmart is just doing this out of the kindness of their heart. And they're like, look, I know you guys are struggling. We're going to keep prices low for you guys because we like you so much. That's probably not the case. So passing it to Kevin, I know Kevin's only got a few. I want to thank Kevin for joining us for a second. So Kevin, tariffs going forward, we've talked about it a couple different ways. And what Kashop's saying is, he feels like it could be catastrophic, something that's kind of bigger than people are thinking. What are you thinking? Because for us, we're looking at the commodities every week. And looking at what's going on with China and tariffs, what's going on with Mexico and tariffs. Canada isn't the great resource nation it used to be anymore, but still, that's going to be put pressure on the markets as well. What are you seeing in any of those areas? Your mic's off, Kevin. It wasn't the mute. I don't know what's going on. It wasn't the mute. Let me see if I can look at it. Edit mic settings. Yep, he's going to come back in. But so just looking at this, so I think the one thing that I kind of wanted to go through, which is, the broader perspective on tariffs, it's economic distortion. This is straight from Austrian Economics 101. Economic distortion, political, I think it's political instability or political problems, moral implications. Once again, it's you put all three of these together, really all I'm saying is you're going to have higher prices. And higher prices also leads to higher inflation rates. Do we got you, Kevin?
Yeah, you got me now?
Yep, we got you. You good.
Dude, I love when StreamYard likes to do its little reset. So my apologies about that.
No worries.
Look, like for me, I think if no one really knows exactly how he's going to leverage these tariffs, right? But I think for Trump and for everybody, we need to take him for his word right now. And that's just how it is. Right. Sometimes we do hear maybe some crazy, maybe eccentric rhetoric coming from him. And then like we think it's a joke and then it's like actually serious. Like we're actually looking at potentially trying to buy Greenland, like, stuff like that. So we have to take it serious. Now, I think that the individuals that are going to be in place to be able to implement this, if you're looking at the U.S., Treasury or maybe some of these other agencies that's going to have a lot of influence, Department of Agriculture, things of that nature. I think you're going to see a little bit more targeted. Now, what I would hope that we do not do is actually implement more tariffs on our allies than we do some of our let's call them perceived enemies, right? Because I believe that we will see tariff policy obviously hitting the books. I don't think it's going to be as aggressive on day one. I think you're going to see kind of a gradual move to the upside when it comes to those tariffs. And it just depends on where they're going to go, right? Like leveraging like heavy tariffs on Canada. I think there's there's a lot of people in the world, especially in the United States, when it kind of like it confused me a little bit. And they think the United States is the end all be all for everything, right? Like if we don't buy something, then like your country's going to go to hell. That's not really the case, right? Like it's all about global trade. And some people and a lot of people now, there's kind of the stigma of globalism. People hate globalism, but globalism actually benefits us a lot, not only militarily, but also when it comes to goods, right? Like we're not the best at mining and enriching uranium here, right? And some of that stuff is really sloppy, like from an environmental standpoint. So you rather like have another country do it. So, you know, the leveraging tariffs on Canada, they can do that, but also Canada ships a boatload of oil here in the United States, and I think people kind of forget that. They think like, oh, we produce so much here, we're self-sustainable. That's not the case. That's not the case at all. And actually, from a refining standpoint, we can't really refine all of the production that we have here in-house, just because some refiners, every refiner is different with the quality of oil that you're able to put in, the viscosity of that type of oil, if it's light, sweet, if it's, you know, heavy, there's so many different factors there. So there's kind of this shift of oil being brought in from Canada and vice versa, natural gas as well. So I think so Canada also can hit us back. And I think actually there was a news article yesterday that said like they are already planning on hitting $120 billion worth of goods that we ship up there. And a lot of the policies, the rhetoric that you're hearing about Canada is so misguided, because a lot of the provinces in Canada have really good trade balances with us here in the United States. Like we are their number one partner in a lot of these provinces. It's not like it's not like the United States. Canada is not like the United States. Like think of Canada as 3, 4, or 5 different regions that all execute their own economic policy independently. Whereas the United States, we're kind of like, as a whole, we're going to do something with Mexico, or we're not. Canada's like, hey, we can do our own thing depending on the goods and resources that we have. I also do believe, and I'm going to try to write this. I've been super busy, but there will be a rebranding of globalism. If you notice, like over time, especially with Donald Trump, and I'm not, you know, look, I hope the best for the next 4 years. Like, don't get me wrong, right? Well, I want the best. But in the first term, it was events that were created as problems from Donald Trump, right, and his administration. And then when we saw small resolutions of those things, he took credit for them. So it's kind of like, well, like you're the one that threw the spaghetti on the wall, and now you cleaned it up, and now you want credit for the cleanup of something that you were the one that kind of threw. And that's where I think you're going to see this rebranding. And that's not a hating thing, but a lot of times, especially when you're looking at the psyche of Americans right now, just given the general election results and things of that nature, they want to see some form of change. I don't think you're going to see that change. You're going to see a repositioning and a rebranding of that change. It's going to be, oh, we're going to leverage so much tariffs on China. But at the end of the day, if he comes up with a trade deal and doesn't leverage these tariffs, he's going to say, oh, look at me, I'm a hero. Well, you were kind of talking about, you know, you don't want to do any business with China in the first place in some respects, but now you're okay with doing it because you have a better deal. And that's kind of what you were talking about earlier, you know, like he's using it as a bargaining chip. And Americans might be fine with that, but that's what we're going to be dealing with. The tape bombs are going to be messy. All of them will be messy, especially if you trade commodities, which is kind of what I focus on. They're going to be messy. Even yesterday. Okay, and I'll kick it back. Yesterday was a perfect example of that. Crude was getting destroyed on an intraday basis, right? We're down like what, 1.5%, 1 3/4%. Scott Bessent comes out and it's like, I'm going to leverage, you know, sanctions on, paraphrasing, I'm going to leverage sanctions on Russia. That's going to force them to get to the table and really impact their economy. You're like, oh, okay, like. Is not want to say curveball, but you know, that type of rhetoric is what you're going to hear. You're going to hear something so extreme that Oil popped a buck after that, a buck and 20 cents on an intraday basis before fading again. So the tape bombs, you got to be mindful of them. News conferences, you got to keep them on your radar a little bit more. But the tariff policy just in general is, yes, inflationary. But I think that Donald Trump also understands, as Kashap was kind of talking, if he doesn't keep this party going, unfortunately, the drop is going to be very severe and significant. And I think it's going to be something that the Fed might not be able to handle as quickly as we've seen in the past. And it may be a little bit conflicted. And so that he's going to have to keep the party going. So he wants to leverage all those tariffs. That's cool. But understand that we're going to still have to have 3%, 3.25% GDP growth, which is kind of an outlier anomaly for average U.S. GDP growth. Usually we're sitting around 2 to 2.5%. We're on the upper end of the bound right now. So you're going to have to keep that up in order to offset the tariff policies that are going to be in place. And you're going to have wages continuing to rise to the upside. Now, the wage component is something that's going to be in his favor from a policy that he is trying to champion. Okay. If the immigration policy actually gets implemented, and I'm not talking about symbolic gestures of building a wall that has openings on literally both sides, but you got a good photo out, right? Like, because that's exactly kind of what happened at the end of his first term. He built the wall. Yeah, it was a wall, but it wasn't like something that was actually keeping people out. It was symbolic than anything. But if you start the deportation process, that's where you start seeing a reduction in labor force, right? And that reduction in labor force is going to then create a scenario where jobs are going to, or companies are going to have to raise wages in order to attract talent. And in order to do that, you got to, which is once again inflationary. Now, if those wage growth gains are outpacing inflation, that is net positive for the consumer. A lot of people don't look at it that way, but dollars and cents wise, it is. That's kind of actually what's been going on for the last year and a half. But people are still pissed off about it, and you can kind of see it once again in the election results. That's going to have to be the case there. But I think you're going to see a rebranding of globalism. I don't think you're going to see this massive, people are going to say that they're going to bring all of these jobs back into the United States. But the benefit, and it's going to sound really negative, right? But just hear me out. The benefit that Vladimir Putin or Xi has is that they ain't going nowhere, right? The benefit that a company also has is they can commit to something, but a CapEx spend cycle, if you guys don't, I know you guys know, but CapEx spends, that's something that you're projecting out 5 years, 10 years, even 15 years out for major capital expenditures. It's not something that you're like, oh, okay, now Trump's in office, I'm going to build out eight fabs now here in the United States. Like, by the time he's going to be out of office, you probably purchase the land and maybe get some picks and shovels into the ground, but it doesn't mean that you actually have to build on top of that. I mean, look at what Intel's been building that fab out in Arizona. It's been actually since the start of the Biden administration, if you kind of think about it, and they just started kind of maybe getting production fully online by the end of this year. So they have time. Companies have time. Companies can commit to whatever they want to because they want to be in his good graces. But are we actually going to see dollars being put to work? I'm sorry, last thing. The grain deal is a perfect example of this, where Xi has more time than Donald Trump, more time than Joe Biden, more time than any president. So if you guys don't remember,
these are like really great points. I hope people are paying attention because these are really great points. No, I'm not. I know people are paying attention because I see the numbers are jumping up, but just these are really great points that you're bringing up, Kevin.
Yeah, and so let's look at the grain deal. So we created this trade war with China, honestly, in my opinion, out of the blue. And it wasn't, I would say it's out of the blue, because Shop and you guys could probably talk about this. What was happening at the time, and people forget because of COVID, we were going into a recession literally right before COVID hit. The numbers were there. Remember,
Kashap and I always talk about that. Yeah, that's
Donald Trump was ripping Jerome Powell's face off to try to make some type of action for the Fed, and there was this duel. So there was this notion, okay, trade war. And if we're going to have a trade war, what are you going to do? Maybe you kind of get more enthusiasm. Maybe you have some protectionist policies. Maybe that stabilizes you for a second. Maybe you can scare enough individuals to kind of spend money. So then we had this trade war occur here, and the big portion of that was grain sales. So we were going back and forth, and grains were getting demolished. Now, back then, we were actually doing really good when it came to grain exports. I mean, we were the number one, and we still are, give or take, we're getting close, but we're still the number one exporter of soybeans in the world, quality soybeans in the world. You know, depends on the data source, right? But we have this trade war back and forth. You do not want to have uncertainty when it comes to agricultural products and geopolitics. That's not the route to go. So Xi, at the end of this whole thing, was like, oh, okay, like we're going to make this trade commitment to buy grain. That commitment was nowhere near being fulfilled. Nowhere near, till to this day, nowhere near being fulfilled. And what was Xi able to do? Build out relations with South America and build out relations with Brazil and Argentina and be able to get their agricultural products from anywhere else. Now they're still importing from us, right? But now you have seen a structural shift of the supply chain because of those. Some of it is because of those actions that we saw, and the agricultural side of the equation has not really been able to recoup. The only way that they've been able to recoup is by constraining amount of acreage being planted, and then obviously improving the amount of production per that acreage. But now we have this glut situation that's really been taking place, which is why grains have been depressed pretty much since the Russia-Ukraine conflict. And the only reason why we saw a pop there is because there was a conflict in the breadbasket of Europe. So there's a lot that says Xi can come out and we could make a trade deal, but it doesn't mean that they're going to commit. And we've seen them not commit in the past. Now, people forget about that because no one cares about agricultural products, even though the majority of the United States is somewhat agricultural land here. So that's kind of where I'm at. But until the party stops officially, you gotta kind of roll with what's going on right now. There's enough people that talking the talk right now where you gotta keep the ball rolling. It's hard to fade this right now. Yep. But when you do see the cracks, unfortunately, I think it'll be an aggressive correction, unfortunately. And I don't think that Donald Trump, personally, I don't think that he has the ability to manage any type of recession in the manner that we've seen in the past. And I'm sorry to say that for anybody that's listening, that's like a huge Trump guy. He is an expansion, run hot economy president. That's what we've been hearing. It's his rhetoric since day one, since he came down the escalator. That's his rhetoric. He doesn't know how to run it any other way. So I think he probably would rather have higher inflation and run this thing hot as much as he possibly can, rather than, implementing a tariff policy that can completely, contract certain key areas of the economy.
I have a question for you. So you spoke about how, I think you nailed it, the way China and South America built their relationship. Now, where do you see this impacting? So the first is US-Japan relations. So the whole US deal, takeover deal falling apart. And the second is increased sanctions on AI chip exports. So these are, and the AI chip exports, it's not just hurting China, it's also hurting American allies as well. So yeah, when you see this kind of, and of course the tanker sanctions, so they sanctioned COSCO shipping, they sanctioned quite a few Russian tankers, so much so that even India doesn't want to get those tankers into their port and risk the ire of the United States. So when you see sanctions and trade restrictions being used as a club, where do you see the long-term consequence of this? Just like how you spoke about China-Brazil relations for soybeans, where do you see that going?
Yeah, that's a really good question. So I think you brought up Japan earlier, right? Like you brought up Japan. Okay, so we'll take them one by one here, and I'll try to be fairly quick. We cannot allow Japan to fail currency-wise, and I don't think that we will allow them to do so, right? So I think you'll probably still hear like maybe some tough rhetoric, because in Trump's previous administration, it kind of got overlooked, but there was actually a defense issue that he was bringing up with Japan as well. And I think a lot of people kind of forget that. Let's say he kind of goes and tries to bring that back on the table, because that's pretty much what he wants: protection money. And it's called, we'll call it geopolitics. If you are a guy like me that's blue collar and grew up blue collar, it's called extortion, right? Like that's just like what it is. So he might bring it up and he might try to push out policy, but the thing is that we need Japan. Japan's the major buyer of U.S. Treasuries right now, and we already know like we're one or two failed auctions away from really maybe having some problems here and having a narrative shift. So I don't think we're going to get too far away from Japan. I think you're going to see, once again, Donald Trump's going to want them to ramp up their defense purchases from us here in the United States. And I think that's going to be the end all be all for that. For the chip sanctions, I actually believe that we will be rolling those back. I don't foresee, look, and Donald Trump's the smart guy. Once again, I think he's a hustler and he knows China. Our chips are already over there. So it's only a matter of time. Like with everything else, it's only a matter of time until they reverse engineer and have the same technology, if not better technology. The sanctions only slow the process of growth in technological innovation for any country. It doesn't stop it. We've been putting sanctions on Iran for a very long time. And Iran, let's call a spade, it does have nuclear weapon capabilities. They may not have the rocketry and the ballistics, but they definitely have the capabilities to create a nuclear weapon. And they probably already have a stockpile of them. We've been sanctioning them and trying to stop that supply line for a very long decades. So sanctions and all this stuff doesn't stop progress. It just delays it. Now, China already has these GPUs. I mean, you can find them on the black market. They got them. It's only a matter of time for them to actually have something that's going to be comparable. So what I say is, all right, you could slow them down, but if you also slow them down, China is like the major producer for two key minerals that are actually needed for these electronics as well. We have a source that's in North Carolina, but unfortunately, there's been an impact, when it comes to that mine. So what do you China can also say, hey, we're not going to export any of these, really key raw materials to Taiwan, because that's who's really making our chips, and to the United States. So puts you in like a little bit of a rock and a hard place, which I say, going back, the rebranding of globalization. Oh, okay. We're going to sanction, or we're going to put tariffs on you. You're going to put tariffs on us. Oh, let's come to a deal here. You can get the chips. We need the resources. Rebranding. And then they come out looking like champions. Oh, look at us. We're having diplomacy in the market. And then what is the market going to say? Oh, nice. We're kind of easing our tensions with China. Let's throw some more dollars in, right? That's how all of this stuff works. This is politics. So I feel like that's going to be the case. At first, you're going to hear the strong rhetoric. At the end of the day, Donald Trump will capitulate. And he will capitulate to Xi. He will capitulate to Putin. There's a reason why he's very fond of those individuals. And it's not just because of his admiration just in general. Dude's got money interest in this. And people that he's bringing in his administration also have substantial ties to both Russia monetarily and China. That's not a conspiracy. It's just these guys are businessmen and women, right? So I think you're going to see a deal there. I don't think there's going to be a longer term impact when it comes to the technology trade, though, between the U.S., because there's not a lot of other places that you can kind of go, right? Taiwan's kind of in the fray of everything right now. They really don't want to export their IP to the United States because, as soon as we get that full IP, it's over with. They have no more leverage. That's why the fabs that they're building out, they're not the new technology fabs, right? They're building out 3 nanometer, 4 nanometer fabs here. They're not building out the latest and greatest because they know that it's just a matter of time. And so one administration, it won't be Trump, but somebody eventually will be like, yeah, we got everything that we need from you. So why don't we just go anywhere else? So I think you're going to see kind of tensions thaw there. Sanctions on Russian tankers. I will not be surprised if you see that relax within the first 90 days. That is more of a Biden being petty, and he should have did this a year and a half, 2 years ago. Why are you doing it now? I think it's more of a petty move from the Biden administration. Could it bolster the dark fleet? It could. India's going to say, okay, we're going to go around this, but look, they've been saying that they're going to try to diversify their energy imports. and get away from Russia for a very long time when it comes to oil. And they just haven't done it. And we're going to turn a blind eye to them. We have not held India accountable for any of the sanction violations. Have you noticed that? Everybody else will come back and we'll start, oh, well, this country is doing that. We'll put them on blast. We'll and all of this stuff. India, out of sight, out of mind. And there's a reason for that too. That's kind of like our main hub between East and West because they have good relations with both. It's kind of like Turkey. Turkey's not the best ally for the United States or NATO at all, right? And actually, in some cases, you might even question why the hell they're even in NATO. But they got they have the largest defense fleet within the region, hands down, one of the largest militaries in the world, and they're able to kind of play both sides. So we don't go after Turkey, even though they might violate some of the things that we're doing. So I think that you're going to see a pullback in those Russian the sanctions on Russian oil as well as tankers. It won't be a complete rollback, but there will be a rollback. There will be a concession when it comes to the Russia-Ukraine conflict. Unfortunately, Russia will get the Donetsk region. I mean, like it's pretty much writing is on the wall. They're going to split Ukraine up. And then there's going to be probably 100-mile buffer zone that they're going to have a coalition be able to manage, right? A DMZ situation, just like we have with North Korea and South Korea. And we're going to say, okay, they cannot join NATO for like 15 years, 20 years. They'll put some BS timeline on there. That's enough time for Russia to kind of, once again, stall out the clock and then just ramp up again. Because Russia has taken significant hits in the Ukraine-Russia conflict. They're not going to fully admit it, but their oil infrastructure is getting ripped to the point where it is having an impact. I mean, they're not even producing as much oil, and they come back and they're like, oh, well, we're trying to help out OPEC. No, it's not. You don't literally have the throughput capacity right now to do what you need to do, because the Russian infrastructure that's being hit, for people to understand, it's military. The bulk of the products being produced at these refineries are for the military operation. So if they hit those, then what do you need to do? You backfill some of the commercial operations to give to your military, right? Your supplies. So they're stretched. They're stretched. And the manpower that they've lost is actually going to be a generational problem for them demographically. So is Ukraine. Ukraine's like a make or break. Let's say that the war stops today. Knowing the amount of people that left there, knowing the amount of individuals that have died within the Ukraine crisis, technically, just looking at the demographics, they will stall out and fail without any immigration policies to back up their society. That's unfortunate. That's just the results of war. So I think you're going to see a pause. You're gonna chill out a little bit. I think you're gonna see the aggression come back. Georgia is actually a really great example. I'm sorry, I got to go on this. Georgia, you guys remember the Georgian conflict? This happened like late 90s, early 2000s, right? So we had like the first conflict. Russia tried to do as much as they possibly can, kind of got their hands in there. Everything died down. And then Russia went back in and tried to, complete the process. That's what Russia's known for. And I think they're going to do that with the Ukraine conflict. But I think you're going to see an easing of tensions there. And Donald Trump is going to need to have that. If you're going to have the policy that he is, he's got to find some wiggle room from the inflationary aspect of it. And putting tariffs on Canada and oil prices ripping to the upside ain't going to do it. Keeping those sanctions on Russia is not going to do it. He's got to find some wiggle room. It's not much. And you don't have a complacent Fed right now until you get to 2026.
And I want to talk to a little bit about the immigration stuff because you mentioned it earlier. And the one thing you have to think about too is a lot of these companies, have either immigration labor. They're bringing in people on visas. Not to mention, like a lot of the tech companies, you got people on visas for many, many years. They're able to pay them what they need to. They're hiring out of the country. There's a lot of things that they're doing, and the policies that he's talking about would take away from these things. And the big thing that I keep thinking about is, do we think that the people that he's probably has business ties to, not hating on it, that's, I'm not hating on that at all. I'm just saying that's the way it is. he probably has business side too. The people who helped him get elected, the people who are donors to him, do we really think that they also are on the side of like, let's change all these immigration policies so then, you know, we'll have higher labor costs? And, you know, none of those things are possible. And at the very least, if it is, it's something where you don't care about the people who are backing you. And that could be the case. I don't think it is, but sure, if you want to have that part of the story, sure. But I think that, you know, it's very dynamic here when we look at all these different angles. And what I see is any way you look at it, we'll probably see higher inflation. All that really has to tick off is one of these things. One of these small things has to come into, and the next thing you know, inflation will probably tick off back again. It's already moving up. I'm not saying it looks good. I'm not saying it looks terrible at the moment. I'm just saying it's strong. It's sticky.
Come on, man. Call a spade a spade. It looks bad.
It looks bad.
Good prices going up 6%, 0.6% month over month, and that wasn't even the month that had the major pressure. I mean, January's got the major pressures. It looks bad.
It looks
Waller coming out and saying 4 cuts this year. I'm like, dude, what?
I saw your post on that because that made me laugh because I'm like, okay, wait a second. Like, you know, you and I were on, and Kashap as well. You know, we all have kind of the same idea when they started talking about rate cuts. You know, for me, I thought it was impossible. Kashap's the one who changed my mind. So I was like, why in the world would they ever start cutting rates right now? The market's hitting new all-time. It's like as many reasons as you want. Market's hitting all-time highs. Economy's strong. You know, all of these things are happening, and they're going, okay, we're going to have this many rate cuts. Which was last year. At the beginning of last year, they started talking about rate cuts, and it just sounded ridiculous. And then they started to cut them. The 2-year yield just skyrocketed the second they started to cut rates, basically saying, hey, this is probably the wrong move. So once again, there's a lot of things out here right now that are just screaming inflation. And so go ahead.
Because I do got to jump here. I agree with you. The immigration side of it, once again, rhetoric and actual action.
Mm-hmm.
There's 2 ways that you can stop immigration or the perception of immigration. There's 2 ways, right? You can deport. You can start, you know, doing all this stuff, border patrol and increasing their budget. But honestly, you don't have enough. There is not enough manpower to actually handle this problem outside of maybe enlisting some like militia groups, which I know people are probably like, dude, did KG just say that? Yeah, I would not.
It happens.
It could actually happen here.
It's a real thing.
Or just like we saw with COVID-19, you guys remember with COVID-19, there was one thing that actually did happen. You wanted to see the numbers go down. What did you see for COVID-19 when it started ramping up? And Trump was pissed off about that. You wanted to see the numbers going down. What did he want to do? Slow down the testing, right?
Yeah.
What do you do if you want to see the boogeyman go away for immigration? You want to see an immediate impact?
Bring the numbers down.
Stop the count.
Mm.
And that's not something that's like a conspiracy. A government has done that literally throughout history with data.
I mean, look at our CPI reports. We just pull out, you know, when inflation's getting too high, we pull out the things that are going up too much.
Yep. Yeah.
It's also companies. Look at what Apple did. The moment iPhone sales went down, they said we are not going to give out device information anymore. Problem solved.
Exactly.
So it happens across the board. Right? So that's a good point.
Netflix did the same thing. I mean, they're not going to start. I don't think. What are they not publishing their subscriber counts or not?
Yeah.
So it's like, you know, at the end of the day, you want the data. I can change the data. I can show you the growth of the data. I can try to do as much as I can to impact the data, or just will see it. Do we need an office that collects this data, or is it wasteful spending that Doge can like cut out? Right? Like, and that's nothing against the dude.
That's a good point.
I mean, dude, let's call it a spade. I mean, you ain't cutting that much federal dollars because, I mean, it's going to impact a lot of the constituencies that have exposure, right? But that's also going to be a thing. And that's just how it is. And you change narratives, you change rhetoric, and you continue to go forward. Now, this is probably one of the more pro-business presidents that we've had. Obviously he had 1 term, but he's going to be pro-business. He's going to be pro-markets. He's going to probably be reactionary to markets. anytime that we see excessive stress. So, from an equity standpoint, you can't trade that, but you can't fade that trend until something materially actually occurs. Drying up of credit markets, some exogenous type of an event, yen carry trade, buy now, pay later, which everybody has forgotten about the massive, extensive risk that's in buy now, pay later. All of this stuff. Once that kind of backs out, then I think you got to run with this right now. I think you got to run with it, but be aware of the tape bombs. I gotta jump. I'm sure that I pissed off a fair amount of people here today.
No, it's good. That's what we're here for.
Good perspective, right?
It's perspective and telling the truth. I don't care what the truth is and how many people it hurts. It's just the truth, and you nailed it. So thanks for joining us, Kevin. Kevin Green. Make sure to follow Kevin at KG Bull and Bear, and we'll be on not this week on Monday because it's a holiday, but Tuesday this week at 11 a.m.
Yep. All right, man. See you guys
later, Kevin. So yeah, that was good, and it's interesting because there's a lot of different perspectives on there that we all kind of discussed. So anything else you want to cover today, Kashop? Because man, that was a lot there. Yeah. We keep going through history. I like the history stuff, but like you mentioned earlier, it's very similar, and that makes it scary. Now, once again, different Fed. Different try to catch the bottom, different and it's kind of like COVID, like that type of crash that could have happened in COVID could have went one of two ways. It could have went the Fed trying to tighten the money supply, doing something stupid like they did in the 30s, and maybe that would have lasted a lot longer. It could have been they did nothing, and maybe it just the market would have been in a much different place. I don't know. But kind of it's either way. The way to look at it is there are some headwinds here. Like there's headwinds, and that's something you can't really write off. Now, once again, like I have all the signals to say, hey, stocks are okay right now, but I still see the signals for me is I don't want to be in the Mag 7 this year. I don't think they lead the way again. I think everybody's expecting it. I think a lot of people are going, okay, it's got to be the Mag 7 or nothing. You got to be, even the analyst meetings I have or talking to other traders, it's the Mag 7 or nothing. And, they're still doing great. As long as they're doing great, everything's good. I'm seeing, if you look at the beginning of the year, actually, I just did a video on this, so I'm sure I could bring up this chart pretty easily, which is what has led this year so far is fascinating. And that's something that nobody's talking about right now because everybody's stuck on, oh my God, the market's down. It's the end of the world. I posted my returns the other day, and I actually posted a screenshot from my actual personal portfolio because I didn't want people to think I was bullshitting them because it's insane. And the market is actually under a lot of pressure. So let me see if I can find this. I just posted it the other day. Oh, it's under Koyfin. So basically, this is the returns year to date, just from the beginning of the year to now. Let's see. And I think I just posted it on our channel yesterday or something too. So here's this was yesterday. So and today they're all up even more. So oil's up 10% now. I think XLE is up probably 8% now. So they're all up even more today, but I'm just saying, look at the way this is shaped. Consumer staples all the way at the bottom. Utilities are just above that. They're just above flat. And most of the stock sectors, they just got above flat now. They were negative up until 2 days ago. So now the NDX is up 1%. The S&P 500 is up 1%. Out of all the indexes, the Russell is up the most, up 1.5%. XLF, which is up a lot more now because of earnings, is up 2.6%. XLI, which is industrial, is up 3%. XLB, which is materials, is the leading sector besides energy. Very interesting to think about because it's been a laggard for many years and it's gotten the crap kicked out of it. Usually how it works, things that get the crap kicked out of it and then start to show relative strength, those are the areas you want to be looking at to find alpha and outperformance. And then after that, we have the energy sector, which is up, I think, 8% today now. It was up 2% yesterday, or the day before yesterday? I don't know. It's one of the days it was up 2%. It was a leader for the day. Now it's up even more. Crude oil up almost, it's over 10% today. And then we got natural gas is up even more than that. So this is all very fascinating to me. The money continues to flow into these areas that nobody's looking at. And I could say a million times, and I could be like, hey, this is how we're positioned. Hey, here's the positions, because you and I, we show our actual trades. So here's the positions. Here's how we're making money. We're not in the Mag 7 names right now. For me, I yes, I do have the semiconductor position still on. But once again, it's not like my portfolio is concentrated into semiconductors. We're very diversified and not heavily in tech anymore. So, I wanted to get your thoughts. Why do you think that so many, let's talk about it psychologically, because really that's what's going to drive the market in the short term. So why do you think so many people are so stuck on the Mag 7? And we could go through history, all the different times where there's been this type of concentration. So whatever you're thinking of here, like, why do you think so many people are still on this Mag 7's got a lead thing?
Sure. So 2022 was actually the time where tech valuations came down and almost everyone missed it. And you have this famous example of the Morgan Stanley CIO, so Mike Wilson. He was bearish, and then S&P just went straight up, straight up, straight up, and finally he got fired from his investment committee. So when you see examples like this, what actually happens is people think not owning the Max 7 is a career risk. It's not about the returns. So I think there's a quote by Keynes or someone where they say it's better to fail conventionally than to succeed unconventionally. And that is simply because in periods like this where everyone owns the Max 7, you say you don't and then you underperform, you're getting ready. And if you're an analyst and you say underweight the Max 7 and the Max 7 goes up some more, you're getting fired. Now, if you say overweight the Max 7, then it doesn't matter because that's what everyone else is saying. It's not a career risk. We have come to a point where if you're not long the S&P or if you're not beating the S&P's returns, and it's pretty crazy. Like it's impossible to beat the S&P's returns when it's on such a run unless you are closely correlated to it. And I mean, with futures, it's different, but if you're doing equities, it's really, really difficult. So a lot of people have underperformed. And because of that, they are now forced to catch up, which means allocate more to the Max 7. And it's even easier now because you have 2x leveraged ETFs. So you buy call options on the 2x leveraged ETFs. And it's like whole level of speculation. And then you have the 0DT options on the futures. So you can do all of this and everyone's trying to catch up doing the same trade. Now, it all ends when the liquidity dries up because when the liquidity dries up, there is no natural buyer on the way down. And that's precisely why I think we'll get a Minsky moment because you have gone so far up on just FOMO and trying to be one with the crowd that when it breaks, the crowd will have no one to sell to because no value investor is going to buy the S&P at this level. No value investor is going to step in and buy. So let's just take Nvidia, $30 billion in sales every quarter. So that's $120 billion in sales. What's a good multiple for that? Maybe 1.2 trillion. It's at 3 trillion. So these things are going to fall 80-90%. And let's not forget, semiconductors are cyclical. So when you have a slump, you're going to see falling revenues, you're going to see write-offs, you're going to see, and this is something we have seen pretty much every cycle since at least the dot-coms or even going back further to the 1980s. So when you see revenues fall and profits turn into losses, valuations are going to take a tremendous hit and there's going to be no buyer on the way down. So everyone's chasing the Max 7 because not chasing it is a career risk. But when it suddenly becomes consensus that we should avoid the Max 7 and let's say buy natural gas or energy stocks, at that point, it's going to be a bloodbath. Same with how it was with the Nifty 50. And I think that's going to be where we are headed, and I am very very comfortable being in commodities because commodities are going to be the exact opposite of equities. So if you look at the cycles, they're always canceling each other out. So commodities go up and equities go down. So I think very comfortable being in commodities, and I think one last question to you, and probably we can end there. The January effect, real or imagined? What do you think?
The what?
The January effect?
Oh, the January effect. Okay, I thought you said January effect, forex.
Uh,
But
okay.
yeah, so there's two things about it. One, it is very real. And the one reason why I'd say that is just back testing. You know, it is real. However, at the same time, you have to always understand that things can change. Now, once again, we're looking at a market that's going through inflation that could possibly move into different areas. Like, let's say we get to the end of this month and energy looks exactly the same. Let's say the S&P 500 slightly down. I wouldn't be bearish on energy because of that. I would go, okay, the money's rotating into energy. So I think that's the thing that people need to keep looking out for is this relative strength holding up. Is this just a move where we're going to get to the top of the range in oil again and fail? Or is it a move that's going to be consistent? And I think it'll be said to be consistent if we continue to see this relative strength hold up. If the S&P, I'm not saying to me, I'm not bearish on the S&P 500 yet. I don't see the signals to time to get out of that whole thing at the moment. But what I am saying is there's much better areas to be in, much better areas that don't have as much risk to the Mag 7, like energy, like materials. These are very small sectors inside of the S&P 500. And so because these are small sectors inside of the S&P 500, you can find different areas to be in. You don't have to just be in the S&P. You don't have to just be in the Mag 7. And so just looking at it that way, if we look at the January effect and just go, okay, well, we're going to just look at it and go, if the energy sector is up, I'd be a little bit more bullish on energy if it's outperforming at the end of this month. And if the S&P 500 is up, that doesn't mean I think the S&P 500 is all systems go till the end of the year. But I am saying if I look at a back test and I go, okay, post-election years, how many years have been up since 1980? That's 90%. 90% of the years have been up since 1980. If I look at the January effect, how many times if January is a green month, how many times is the year green? And that percentage is at 80. I think it's 88 or 89%. It's pretty high. I just posted on Monday. I think if you guys want to check it out. But so just looking at those couple things, it's just a template to go, yeah, it might be okay, but either way, I think there's going to be underperformance in the S&P 500 this year, and some of these sectors like gold miners, like gold, like some of the commodities, the energy sector, maybe even materials will be the outperformer, and a lot of people aren't going to be ready for that at all. So, but yeah, man, that's it. Let's end it there. I think that was a great show. I hope you guys enjoyed it. Great idea to go over tariffs and Smoot-Hawley. I'm glad we'll do that next time too and get into that a little bit deeper, just you and I, so we can just kind of go down the rabbit hole on that. Because I think that's going to be a theme that we're going to see in the next 4 years that we need to be paying attention to.
Yeah, I'm looking forward to doing that. Let's do that on the next show.
Cool. Sounds good. All right, guys. We'll see you next Friday. We're on at 11 a.m. on Fridays. It's been 11:30 lately. So we'll be here around 11:30 on Fridays. We're on YouTube, Twitter, you name it. You can see it. All right, guys. Thanks for joining us.
Bye, everyone.